My name is Scott Galloway. I teach at NYU, and I appreciate your time today. We have approximately 140 slides in 1,200 seconds, so let's light that bougie. Bougie is French for candle. That's right. We're going to talk about decades and days of four and what you should do. Decades and days, what does that mean? Lenin has this great quote, there are decades where nothing happens, and then there are weeks where decades happen. By the way, let's mark time. Let's mark time. A global pandemic killing hundreds of thousands of people. That is bad. What's worse? No gun. I am so pissed off about this. So I wore a shirt. I unbuttoned it because I thought you could use a little dessert.
This is Lions Live.
Anyways, I miss Khan. More deaths in the US now than in World War II. It's going to go up from here. We have now lost more people globally than are killed by asthma each year. 26 million people, 8% of all Americans filed for unemployment. The S&P, their worst quarter ever, down a third, although they've largely recovered most of that. The Dow fell by almost a quarter in its worst quarter ever, and we're seeing economies crashing. By the way, the indices are nothing but false or cold comfort as they no longer represent the economy. It's hard to imagine that we don't go into a depression at some point. Central banks are going to helicopter money, but it'll be interesting to see if even that type of global coordination can keep us from, or keep the wolves of depression from this door. U.S. alcohol sales up 55% in 1 week. I think I was 5% of that. Zoom, kind of the poster child for who are the unintended winners here. 250 million now daily active users. Some predictions, decades and days. Let's go back to the predictions from mid-December to see what we got right, what we got wrong, what we got wrong. I think the Democratic nominee for the presidential election would be Buttigieg or Bloomberg. I was wrong. It was Biden. We have seen a pivot to the middle as Democrats would rather nominate somebody who may be suffering from early stage dementia than someone who is a rabid bigot who is stupid and has lost our standing in the world as the premier superpower. And they've decided to pivot to the middle with Biden. Too soon to tell. I believe a CEO of a tech company is going to be criminally charged, most likely on European soil. Amazon will be the fastest growing healthcare company. Apple stock increases 20 to 30%. Airbnb will become more valuable than Uber on its IPO. Resale is the next fast fashion. What have we gotten right? Disney wins round one of the streaming wars. By the way, Quibi is already dead. For those of you who are reading about Quibi, they're already seeking assisted suicide as Meg Whitman and Jeffrey Katzenberg likely can't stand the intense pain of tech failure. Twitter attracts an activist investor. That happened. That was only a matter of time. Vision Fund 2 does not happen. What we feared about video games is happening in porn. The largest unsupervised experiment on young men in our history is happening in porn. There's no research here because no academic wants to be known as Professor Porn. The new giants, Shopify and Roku, that's happened. Private company valuations will continue to climb. That's happened. Cybersecurity stock soar, that's happened. The party stops in 2020 with a 20% plus correction in the Dow. Again, I made that prediction in the middle of the December. Let's talk about the four. To understand the four is to understand media, commerce, antitrust, American economy, global economy. As you get older, you become more like yourself. Supposedly, tech companies were going to get hurt harder in a downturn because they had appreciated more on the upside. Well, you know what? With big tech, it's heads I win, tails you lose. These companies do better coming out of a recession because they consolidate the market. They're now 22% of the market cap of the S&P 500. As a matter of fact, we should call this the S&P 7 because there's 7 companies that are worth more than the 400 bottom companies in the S&P 500. These companies are now worth more than entire stock markets. We have these companies becoming kind of controlling the indices. These indices are actually becoming a damaging metric as they create this notion that our economy is somehow okay. The best of the best are now the public companies. They're the consolidators. They're the ones that in this massive income inequality also plays out in the corporate world, will be able to consolidate the market, take advantage of cheap acquisition prices, have access to cheap capital vis-a-vis the equity markets where we have investors who are wealthier than ever and fewer companies, only half the number of publicly traded companies as were 20 years ago. The IPO class in the next 12 months will be the biggest or the best performing IPO class of the last 10 years. Oh, by the way, things are awful unless you own big tech. If you sit here today having owned Apple, Amazon, Facebook, and Google on January 1, you are up 14%. That's right. Post-pandemic, you're up 14% halfway through the year. A lot of big tech was hoping for redemption by behaving more responsibly. But then came Zuckerberg. Zuckerberg is now the mother of all oligarchs, who is using his proximity to power to, in a corrupt way, buttress his own wealth. His proximity to Donald Trump has outed him as somebody who does not give a flying fuck about the Commonwealth of America or the well-being of our populace, but just cares about shareholder value. Amazon is retail. Basically, there's Amazon and there's Walmart, and then there's the rest of retail. If you'd invested in retail stocks 5 years ago, a historic run in the S&P up 46%, but retail stocks are down 16%, except one company which is up sixfold, and that's Amazon. The CARES Act, the rescue package in the U.S., might as well be called the Walmart and Amazon Shareholder Act. Imagine, if you will, putting trillions of dollars of stimulus in the hands of American consumers. Who are the largest recipients or beneficiaries from that stimulus? The two largest retailers, Walmart and Amazon. But wait, we want it better. We don't want our stocks to go up 30%. We want our stocks to go up 60%. So let's do this. Let's put a bunch of money in consumers' pockets who go to Walmart and Amazon. And I know, let's shut down, let's federally mandate the closure of 98% of their competition, such that if you're Amazon or Walmart, you sell beach chairs, beach towels, sunblock, but the guy down the street who has a surf shop isn't allowed to be open. This is nothing but an extraordinary, massive pump of Amazon and Walmart shares. We're seeing the biggest companies in retail start to make the jump to light speed. We're also seeing the largest top-line revenue company in the world, Walmart, outperform everybody, adding 10% year on year to their top-line revenue, which is just staggering. What is happening here? What is happening here? We are having a decade in weeks. I love this graph. Essentially, the percentage of retail done via digital channels has gone up 1% each year. And as of 2020, it was at 18%. And then in 8 weeks, it went to 28%. We had a decade in 8 weeks. And that's what COVID-19 is. It's more of an accelerant than a change agent. And you personally and professionally want to take every trend in your industry, take it out 10 years, and then go, that's where we are now. And it's our human, our financial capital, our strategic decisions, the way we approach business, foot to where this business was going to be in 10 years. Because guess what? We are there, my brothers and sisters, a decade in days. Lenin said sometimes a decade can go by and nothing happens, and then decades can happen in weeks. We're in that weeks part. Retail plummeting down 17%. The mix between tertiary and digital, fast forward 10 years. We're seeing big box essential guys do much better. Specialty retail, which was starting to decline, is now declining like crazy. Online grocery was 1.8% in the US. It's about to jump 15 to 20%. Think about what happens when $100 to $150 billion of grocery transitions from tertiary to online. You're talking about cold storage, logistics, pick and pack automation. This is going to create tremendous disruption and tremendous opportunity as online grocery accelerates. The gap between us, the US, and the rest of the world in terms of home delivery not only close, but accelerate past it. And again, we're seeing the mother of all bifurcation. There is no retail anymore. Amazon loses or gains the value of the entire specialty retail market in one trading day here in the US. And what are they doing? What is big tech doing? Well, everyone else is on their heels and laying off and furloughing people. Amazon, Apple, Facebook, and Google have told their recruiters, get on it. And they are recruiting like crazy because they see an opportunity to pick off the best people. Who are the smartest people at Cannes working for brands? Who are the smartest people working for agencies? Who are the smartest brand managers at Cannes? Simple. Next year, they'll be at Google and Facebook's beaches because the best people are being swooped up by the big tech firms. AWS will be spun and be the most valuable company by 2025. Whenever I go to Washington to speak to elected representatives, I don't talk about trends. They know the trends. I talk about scale. Now, if you want to talk about income inequality, talk about an individual who pays no taxes but could buy every NFL team, buy the best 3 teams in Europe. Oh my gosh, I need to take a break. What should we do? Given we're here at Cannes? How do we get things going again? Okay. By the way, Cannes is the only place. I'm a bit of a celebrity at Cannes. I'm kind of a big deal at Cannes. People come up to me and they say, you're the professor that hates Facebook. Let's go grab rosé. Well, guess what? I still hate Facebook and I still love rosé. Oh my God, my first car was a Renault car. Renault car. The French know how to live life. They do not know how to build cars. But I digress. Anyways, oh, nice. Bezos, with his wealth, could buy every team in the NFL, the top 3 European soccer teams, which is up for debate. I think it's Bayern Munich, and I think it's Manchester City. A lot of people, a lot of emotion around that. He could then take his new girlfriend to a movie premiere after buying a large movie company in a Ferrari, because he purchased Ferrari and then have about $12 billion left over for popcorn. What are these companies going to do? They're going to go into other industries because they're running out of they're running out of animals to eat because they have to add so much top line revenue that they have to go after big game. They have to go big game hunting. The 2 industries all of these companies are going to go into most likely, or at least half of them. Healthcare first and foremost, because it's the most disruptible business in the world, US healthcare. It's grown faster than inflation with no underlying increase in productivity. We're about to see this great dispersion, and that is a move away from the physical, the geographic constraints of the delivery of 2 huge consumer industries, specifically healthcare and education. 99+% of people who will survive COVID will never have entered a doctor's office, much less a hospital. So we're seeing this great dispersion of the delivery of healthcare away from the physical constraints of typical medical delivery channels. As a result, we're going to see telemedicine and remote health absolutely skyrocketing. Amazon is already testing this with its pilots. Look for Amazon to be the fastest growing healthcare company by 2023. And why not? They know your body mass index. They know how much money you spend. They know the food you choose. They know if you're in a monogamous relationship. They know your wealth. They know everything that are the indicators of how healthy you are. Get ready for Alexa to offer you health insurance. Get ready to test your kid's rash using a smart, intelligent camera off of Amazon show. Get ready. Here comes Amazon and healthcare. The big unlocks here, the big unlocks. The first big unlock, Apple going into retail, figuring out the pre-purchase branding was losing its effectiveness, so they went into distribution. Then we had the biggest loyalty program in history, Amazon Prime. More people have a relationship with Amazon than voted in the 2016 election, decorate a Christmas tree, have a pet, or have cable TV. The third big unlock, Walmart looking at their stores as assets, not liabilities, turning them into well-lit, well-staffed warehouses where you could bomb in and get great grocery without having to be taxed by the in-store experience. The fourth big unlock, Jeff Bezos announces he's taking his $4 billion in profits that he promised to investors, and he's investing in the world's first, get this, vaccinated supply chain through PPE, enhanced cleaning, additional compensation. They are going to have the first supply chain that says to vendors, customers, partners, if you want near COVID-free, near virus-free products, use our supply chain. This, in a word, is genius, and no one else can do it. Walmart can't do it because they rely on FedEx or UPS delivering products. FedEx and UPS can't do it because they can't pull products off of the front end of retail if they're not COVID-19 friendly. Apple is accelerating. It's being recast as a different company. Its price earnings multiple has doubled with no tangible increase in earnings. Why? Because it's moving to a recurring revenue business, which is the gangster decision every company needs to evaluate. How do I move out of serial dating into recurring revenue? Now, 23% of revenues at Apple are recurring revenues. A good Apple TV Plus launch. Why? Because their content is great? No, their content sucks. The morning show is Murphy Brown on $15 million a year, but they own the rails and it's only 3 clicks away. So I'll watch B Plus content over A content if it's 3 clicks versus 18 clicks. It's great to be a monopoly. It's great to own the rails in the wealthiest neighborhood in the world. We are going to see Apple launch a less expensive phone, very good timing. We're also seeing their challenge is the same as the other ones, and that is they have to find another $200 billion in incremental revenue. Where will they go? They'll go into my industry, which is the second most disruptible industry in the world, education, where we as academics have been preying on the hopes and dreams of the middle class for the last 20 or 30 years, charging them usurious fees. Tenure in academia mean debt on young people. They will come into this industry. It's about to happen September 1. COVID-19 has pulled the curtain back behind university education, where they recognize we have been ripping people off. The great dispersion is happening in education as well, and that is we're no longer going to get to use campuses as the filter to create artificial scarcity where we are no longer public servants, but luxury brands. What bullshit. It's about time. We're going to see the disruption and the mother of all chins, academia, be hit with a fist of stone called the novel coronavirus. We're seeing a huge explosion in online earning. Why? Because this is not sustainable. I typically teach 170 students. By the way, they want me to teach 400 students starting September 1. At $7,000 That's $2.8 million for 12 classes. Okay, let me get this. That's $235,000 a night. I'm good, maybe even great on some nights, but I'm not worth that. This is not sustainable. Why? Because the value algorithm of certification plus experience plus education over tuition has been flipped because the experience is about to go to zero when kids can no longer get drunk and spill into adulthood in a leafy, fun place with football games. This notion that we're reopening in the fall is a lie. And by the way, I don't speak for any university, but any university president making strident statements about us reopening in the fall is entered into consensual hallucination with their CFO. And when they say we will look forward to welcome you back to campus, that's Latin for send in your deposits, because they need the money, because these businesses have exceptionally high fixed costs and are about to enter a death march. These high experience, high tuition universities will be to education what department stores are to retail, and that is they're about to start a death march. We could see 1,000 to 2,000 universities go out of business in the next 24 to 36 months. Look who's claiming they're going to welcome students back, the ones with the highest tuition, because they have to, because they're going to go broke if 10 to 20% of international students don't show up. Our cash cows. We claim we have international students for diversity. What bullshit. We welcome international students because they pay full freight and they're not eligible for financial aid. We get double, sometimes triple our cash flow from these individuals, international students. Who are the winners? The biggest brands can double down. They can use technology, or they can double down on exclusivity. They will begin to use small and big tech to expand their enrollments at the best public universities. And then the luxury brands, the Ivy Leagues only educate 64,000 students a year of the 11 million. So they're more spectacle than historic. They're no longer even universities. They're hedge funds that offer some classes and are drunk on exclusivity. They've totally lost the script and are no longer public servants. I do believe we're going to see universities partner with big tech firms to dramatically expand their enrollments. Facebook and Google owned 60 cents on the dollar. Coming out of this, they're going to own 7 of 10 cents, 70 cents of every dollar in terms of digital marketing. Ad spending is plummeting, but they will come back even stronger. You're going to see them basically have the V-shaped recovery that everyone's going to hope happens in America. The best we can hope for here is an L. I think it's going to look more like a chair. But Google's and Facebook's revenue will decline, but you'll see a vicious comeback when people consolidate their spending around digital platforms. What do you have with these companies? Talk about scale. Just in cash. Google could buy the commercial aerospace manufacturing business. Just with their cash on hand, they could buy Boeing and Airbus. They have a chance to play offense. They are hiring everybody at big tech. They're cleaning up across media and agencies. Why wouldn't you go to these firms when you can have the compensation, the role, and the responsibility of a 30-year-old at the age of 24? Which would you choose? And we're going to see a lot of brands not go back into traditional marketing channels. You're seeing this in the marketplace where stock performance is now an indication of the percentage of revenues you get from recurring revenue or subscription. We're going to see a mortality rate for Corona somewhere between 0.1 and 4%, depending on what numbers you believe. But we're going to see a mortality rate across media from Corona of 10 to 20%. 1 in 10 or 1 in 5 media companies and media agencies will be out of business within 24 months. And then what happens? Google and Facebook consolidate the market and come back with 80 cents on the dollar of digital marketing. So what should you do? What should you do? If you're a striver, a young executive, this crisis will create incredible opportunities in certain markets, specifically education and healthcare, where COVID-19 is going to accelerate a massive reallocation of human and financial capital. If you're an entrepreneur, it's going to be a great time to start a business in about 6 or 12 months because everything will get much cheaper. My office space in Soho is going from $70 a square foot 3 months ago to about $25 just in 12 weeks. You need to cut costs in your personal life. I don't care if it's your phone bill. I don't care if it's your cable bill. I don't care if it's how much money you spend to go on Tinder. You should call everyone and ask and say to them what kind of deal you can get me. Go through every line item in your personal budget and either reduce it or eliminate it. Take your burn down. There is a dignity to living below your means. Build at least 6 or 8 months of cash cushion. Decide what you leave behind. Do you leave a commute behind? Do you leave emissions behind? What are you leaving behind? This is an opportunity to decide what are you going to exit this virus pandemic without, if you will. If you're an executive, you have to cut costs unless you're part of big tech. You need to use the decade test. Let's look at all the trends. Let's go forward 10 years and allocate our capital to that business. Plan for how you can meet at that point within 24 months as opposed to 10 years. storytelling, and that is the ability to communicate internally or externally. What is your vision for what was supposed to happen in 10 years and how you're footing to that vision over the next 24 months? If you're an investor, shift from big tech with a lot of big numbers means the returns on a risk-adjusted basis will still be great, but the real opportunity, I believe, will be in this disruptor class, and that is so few companies will now be able to get public, but the ones that do, the Airbnbs, the Lemonades of the world, are going to absolutely clean up because their investors have as much cash as forever. The top 1% globally are richer coming out of the pandemic than they went in. They all want IPOs, but there's going to be less supply. More demand, less supply. What does that mean? Kaboom! We're going to see a massive acceleration in the IPO performance over the next 12 months from the disruptor class. These disruptors, for example, Lemonade, will go into a weakened market for insurance. Airbnb will enter a weakened hospitality market, and they will be able to use their clean sheet technology, their access to cheap capital, their reputation as innovators, their younger workforce to gain market share. They will be able to gain 10 years of market share over the next 12 months. Again, decades can happen in weeks. They can happen in weeks. That is where the investor wants to be, is in the disruptor class, slowly transitioning out of big tech, only because, and I say this for the first time in 10 years, if Apple is going to increase its market cap by 2 or 3-fold over the next 5 years, which ideally you have 1 or 2 of those in your portfolio, then it's the GDP. It's the GDP of Canada or Brazil. Can it do that? Maybe we'll see. What is the profound opportunity coming out of COVID-19? There is a meaningful opportunity to lap your competition. If you are blessed with a job where you can work from home, and by the way, it's another example of income inequality. 60% of people who make over $100,000 can work from home, and only 10% have been laid off. People who make less than $40,000 a year, only 10% can work from home, and 40% of them have been laid off. That's where we are in America, right? We've basically said to anyone who makes less than $50,000, fuck you. We want to reward the top 1%. We want to give them triple, quadruple what they deserve. Why? Because it's the Hunger Games, and we are just fascinated with rich people. Anyways, if you are one of those fortunate people who has the ability to work from home, you should be working 24/7 right now, because NASCAR and car race is not a photo finish. They're one in the pits. While everyone else is going 0, you should be going 220 miles an hour. If you're blessed with the ability to work right now, turn on the jets. There is variance here and an opportunity to lap the competition. That is a meaningful opportunity. The profound opportunity is to take stock of your relationships. We give medals to young men and women in uniform based on the courage and grace they offer other people, the selflessness they bring to other relationships. Ask yourself 3 questions. 1, is this the opportunity to pivot from the person who was taking caregiving from your parents to being the caregiver? 2, in terms of your key relationships, if because of COVID or another health-related tragedy, you had to say goodbye to somebody over FaceTime, do you have the relationship you want with that person? And finally, have you made the requisite investments to maintain relationships, professional and personal, to cement strong friendships? Have you let slights, perceived slights, or competitiveness, or an inability or unwillingness to make the requisite investments in your friendships such that they have waned? Can you put the bullshit aside? Can you bring courage? Can you bring grace to these relationships? Because if you can, there is a profound opportunity, and that is to cement and strengthen relationships in weeks what might have taken decades. There is a meaningful opportunity professionally. There is a profound opportunity personally. Let's wrap up. We are experiencing decades and days. Look at all the trends, take them out 10 years, put your human and financial capital to where we are in a decade. We are seeing this unbelievable acceleration. There's a dispersion from geographic boundaries. There will be tremendous investments and opportunities both in education and healthcare, and there is a profound opportunity in what is the most important thing in our lives, and that is the opportunity to strengthen and cement key relationships. My name is Scott Galloway. I teach at NYU, and I appreciate your time. I miss Khan. Cheers.